Hello, everyone. All right, I'm just trying to make sure that we are live. Okay, we're recording. So I know that I said that I was going to avoid doing the live on YouTube, but it just is so much more convenient to record these Tea on Tuesday streams rather than doing it on IG Live and then bringing it to YouTube later on. So this is what we're doing. So if you're new to the channel, welcome. This is the Tea on Tuesday, which is trading equities analysis every Tuesday. And my name is Shon Shokumbi. I use this channel to give advice on investing, leadership development, and all things related to the African continent. I am a management consultant, and I have a foundation where I train future leaders of Africa on different aspects of entrepreneurship. But for today, we are talking to you about your personal finance journey and how it relates to trading equities on the stock exchange, specifically the US stock exchange. Now, I do have some exciting announcements, and I've announced this already on my Instagram page. You should definitely follow me at So Says Shon on Instagram. And the link to my Instagram page will actually be in the description of this video. But the wonderful announcement is that I was recently approved for giving official business investing advice, and I'm doing it through my partnership with TD Ameritrade. Very, very exciting. So check out my Instagram page for more information about how you can benefit from those services. So I'm doing this still on YouTube, where I just walk you through the due diligence process. And if you don't know what due diligence is, you should quickly go back to my very first video on the Tea on Tuesdays, where I describe what due diligence is. I don't want to take too much time here, but I'm basically, sorry, let me mute myself. I'm basically walking you through my research process for understanding whether or not you should invest in either a stock, an options contract, and some other different types of equities that are traded on the public stock market. So I'll do this still on every Tuesday and have it up on YouTube, just as a way for you to get your feet wet and understand more about what it means to do research before you invest in any sort of way in the stock market. But know that if you want one-on-one personal advice on how to build your own personal investment portfolio and need examples of different ways that you can make a profit depending on the mix and combination of stocks that you want to put together, go to my Instagram page or go to the link that I'm going to leave in the comment section later on to sign up for a consultation. All right, with that, let's get started. So the other reason why this is so much more convenient is because I get to share my screen much more easily than I would be able to on Instagram. So even though the Instagram people are missing out, they will live and they can always just come to YouTube and watch it. But I'm going to start by showing you analysis of the stock that I'm going to focus on today, which is ticker symbol SNOW, and that company is Snowflake. And there's a couple of things that I consider when I am looking at a stock. And every video that I do for Tea on Tuesday, when it's focused on a specific stock, I show different elements of the things that I consider when I am trying to decide if this is a company that I want to include in my investment portfolio. Today, I think I'm going to combine a couple of them that I've already shown in past videos, and then I'm also going to maybe introduce some new ones as well. So again, there's now a playlist for the Tea on Tuesdays on my YouTube channel. So if you want to go back to those videos and see what kind of concepts I've introduced in the past in order to do this kind of research, definitely check out that playlist. But let's get started. So I am on my TD Ameritrade account right now, and I'm going to share my screen once I pull up where we're going to do the research. Now, I am a huge advocate, disciple, what else can I say, evangelist for TD Ameritrade. I think that they're the best platform, whether you're a beginning investor or not, or if you're advanced. I don't think it matters because they also do a very excellent job of guiding you through the process of understanding what's going on with your portfolio, what changes, why certain changes happening, and you can call them right on the phone right away if you have questions about something that you're trying to buy or sell, etc. They're extremely helpful, which is why I'm so happy that I have my new LLC investment services underneath their company. So one of the best features that they have is just ample information about how to make the best decision on investing in a stock. So I'm gonna see if I can share my screen. Well, I know I can, but I'm just gonna figure out how we're gonna do that, and then we're gonna do it together. All right, so here we go, desktop. Oh, perfect. I can do it. So let's add this, and let me just see how it's showing up on the internet. I'm probably gonna block my face while I'm doing it. Yep, I'm blocking my face. All right, so you know what? Let's just wrong page. All right, it should be sharing right now. I was trying to look at it at the same time, but no worries. All right, so this is the business account that I have for my consulting firm, Carfee. But I'm pretty sure that you get the same level of information under research and ideas if you have a TD Ameritrade account. And basically you go to research and ideas, and then you either go to markets overview, news, etc., or you go to specific stocks overview and profile. So right now I'm under the stocks overview, and as you can see, one of the most recent stocks that I looked at was Snowflake. So we're gonna dig deeper into it, but let's start with this home page first. So I love the way the timeline is outlined here, where it shows, okay, what are the significant things that happen day to day with this stock, because things are changing. I mean, things are changing minute by minute, oftentimes depending on what's called the volatility of a equity or a stock. So. And volatility just means how quickly things are changing in terms of its price, in terms of its value, etc. So obviously, day to day is still kind of a lag. However, having this day-to-day summary of the major things that changed or happened with the stock gives you a huge advantage, and then you can dig deeper into minute-by-minute analysis if you desire, if it's valuable, depending on what you're trying to do or what you're looking for. So I really love how TD Ameritrade, and this sounds like a commercial for them, maybe one day they'll sponsor my channel, but I really love how they have this timeline here for outlining the major changes to a company and to a stock. So one of the reasons why I'm drawn to Snowflake right now and talking about it is a couple of things. So when they had their IPO, I was very annoyed that I missed out on it. And not to confuse you, because I want to make sure we're just talking about due diligence right now on the stock where it's at right now. But sometimes my strategies for when IPOs launch is that I want to buy in as quickly as possible at the first price that it trades at once it goes public. And if this is too advanced for you in terms of what I mean by go public and what I mean by IPO, please again check out my playlist. One of the playlists you probably want to check out for vocabulary to know what I'm talking about is the ABCs of investing. So go there and you can have more time to tackle or wrestle with the vocabulary that I'm using right now. But and basically, initial public offering or IPO is when a company first goes on the stock exchange to be able to be traded publicly. And usually, my strategy for IPOs is buy it as early as possible at the first initial price that it launches at on the stock exchange. And then I feel like more than likely it tends to drop once after a while after that. So what will happen is that because so many people, depending on the stock, are excited about it, you'll see a lot of people buying it, and that will drive the price of the stock up. And so you're getting an easy profit right away, and then it'll get to a certain break point where people start to sell off. And I try to be one of those people that sells off quickly at a profit. So just trying to capitalize on that initial hype around the stock and make a quick buck or make a quick profit and get out of the trade, after that first initial day or first initial week of trading. And with Snowflake, I was really annoyed that I missed out on that. So when I saw this news here where it says, this was as of the time that I'm recording this was 5 days ago, that it reached this 52-week low, that would have been an opportunity to buy in, right? To see, because it's at the cheapest it's been in a year, right? The stock. So that would have been a good chance to buy in if I presumed that it was going to go up again after reaching that low. So let's see. So then the day after, suddenly there was a lot of people buying again the stock. It says extreme high volume. It exceeded a 10-day average by this much. So it means that people were watching it and waiting for it to get low so they can buy it very cheap. So my theory was initially correct that yes, this would have been a good time to buy it. And if I did buy it then, which I did not, but if I did buy it then, I would have bought it around $205 or $208, and by now would have had approximately like a $15 or so profit, because right now it's trading at $223. So that's why, and this is me just talking out loud as I'm thinking through what I'm going to do with this particular stock, and hopefully it's helping you as I think out loud. But basically, this is why I also don't just focus on momentum trading. The times that I do focus on momentum trading for the most part is when I'm trading options. And there's a video on that separately someplace as part of T.E.A. on Tuesday, so you can watch that on my YouTube channel. But for stocks, I usually just want to set it and forget it. And usually I have a much longer term play, or a longer term, I wait a lot longer to reap a profit off of a stock than I do off of an options contract. Even with options contracts, I'm still very relatively long term. So like I'll buy a stock, sorry, not to go too much into options, but I'll buy an options contract that I don't expect to trade within, at minimum, 3 months, right? But with stocks, I'll probably go like 6 months or even longer, depending on, what I feel like I can make in terms of a profit with this stock. So yeah, it was at the 52-week low at this point, and this would have probably been a good time to buy. But it also looks like now it's starting to go down. So I don't really want to use that as my total judgment as to whether or not I would have wanted to get in or not. There needs to be something more that is compelling me to buy this stock. So what the more is basically what are the fundamentals of this business. So fundamental analysis, again, that's part of the vocabulary words on my ABCs of Investing playlist. So you should definitely go there. I'm going to have a card at the top of the screen so that you can click it and go straight to the playlist. So you can make sure that you catch up on those vocabulary words. Okay, so it seems like a lot of people were waiting for it to go low so they can buy in. So that tells me that there's some institutional traders potentially, and also potentially some regular traders like you and I, who feel like this was a good buy, and they were just waiting and watching for a good time to get in. So let's learn more about it besides the big highlights that we just went over. So the market, at the time that I'm recording right now, I'm just saying this out loud for people who are watching the replay. At the time that I'm recording this right now, the market is going to close in another 8 minutes. So there's not going to be much changes that are going on. So this is pretty much how it's looking for the end of today, which is Tuesday the 30th. And when I do my analysis on whether or not if this is a good or bad time to buy in, I do look at the trend of the chart. Like, is it ticking up or is it plateauing? And what's been the pattern? Like, what's been the number of peaks that happen before it goes down again, so I can see where I'm at on the trajectory of this stock. So this is a 5-day chart, and so far over the past 5 days, it's been mostly down, and then it's almost like this literally is this trend. What do you call it? Transposed, or transposed, I think is the word. Or flipped over, basically. So it's like the same exact trend. So if it was doing this same pattern as it was decreasing in value, and now it's flipped over and it's doing it on the opposite end, right? Which is a little bit confusing to me, I'm not gonna lie. So let's expand out a little bit longer. So let's see how this has been playing out for the past 3 months. So this is why I like a wider time frame to understand what's going on with this stock. So right now, over the past 3 months, the stock has been still trading a lot lower than usual. So even though it did reach its 52 lowest range or lowest price over 52 weeks 5 days ago, it's still trading significantly lower than it has been trading in the past 2 months, or the earlier part of this year, right? And if we expand out even further, it's definitely like, this is what I'm talking about. Like, it was around this time where I was like, oh man, I really wished I had gotten into Snowflake because it just had this spike up, and people had realized huge profits. This is at least, so right here, it was below 250. So let's say it was around like 230. So if you bought it around here, which was back in either October or November, probably October, I think November starts right here, then you saw your investment double by towards the end of December going into January. And then this would have been a good time to sell off and take a profit. So I would have doubled my investment at that time. So over the past 6 months, what trend do we see? And trend line, with this chart, I'm a little bit hesitant to just use this as my determination of whether or not I'm getting it at a good point, because there doesn't really seem to be a clear pattern of what's going on. But what I do know is that right now I am able to buy it at a very cheap price still, even though I missed the 52-week low. I still have an opportunity to buy this at a significant discount, because if you see over here, hopefully you can see my, I don't know if you can see my, let me make this bigger. You'll see my face eventually. But you see that little red at the bottom there, or towards the end of the chart? It's much lower, the price, than it was over here 6 months ago. So that tells me I'm buying it still at a significant discount, a significant discount, even though I missed the 52-week low. All right, so potentially buying it at a discount, but then do I feel like when I buy it at this discount, I'm going to see a profit either in the next month, the next 3 months, etc.? When am I going to see a profit? That's my next question. I can take it out a little bit longer and see if the 1-year chart shows me any any trends and still no. And I can explain some of this by some of the news that came out last week, because today is Tuesday, so it came out last week where there's just been a huge sell-off of tech stocks in general. So Snowflake is a tech company. I probably should have started with that, just knowing what does Snowflake do, right? So again, another great thing about TD Ameritrade, I'm sure other platforms do this too, but they give a company profile in a very succinct manner. So Snowflake is a technology company, basically in general, right? But it is more specifically a cloud data platform. The easiest thing I can compare it to is, and it's probably not the best comparison, but the easiest thing that for someone who's very unfamiliar with what this means, the best thing I can compare it to is like Google Cloud or Google Drive. That's a very rudimentary comparison. But cloud data is basically anytime you store information in the cloud. So digitally, not on like actual hardware. So it's a cloud data platform where companies, large-scale companies, usually use Snowflake's platform to store tons of gigabytes of data for their different analysis and business insights. So that's what Snowflake is. So it's a tech company. And basically what I was saying is that the reason why I can explain this downturn, significant trailing downward trend for this chart is because it was announced last week that there was a huge tech sell-off. So a lot of institutional traders were selling off their holdings in tech companies because, especially things like that were quote unquote work from home tech companies, because of a belief that we're going to see work from home kind of dwindle down very soon now that there's a significant vaccine rollout and people are getting vaccinated. They're betting on the fact that more people are going to be going out to offices and actually working outside of the house moving forward. Now, I am of the philosophy that even if that is going to happen, these tech tools are now so widespread and so many people have been relying on it, especially for the past year, that I don't think that they're going away anytime soon. So I can follow what the institutional traders are doing, and probably most of the time you want to, for the most part, because they have a little bit more insights and information than we do. But I don't know, just me personally, I find that interesting that people think that we still won't need cloud data services. I think that businesses still need that because it's very expensive and very tricky to store so much information that's being generated by companies on hardware, right? They're going to have to outsource it to a cloud service regardless. So I think there's other things going on with Snowflake besides just the general trend of the market to reduce their amount of tech stocks that they have in their portfolios. So let's figure it out. So and sorry, I don't know if the train is very loud. Apologies for that. And then there's also a fire truck passing by, but we'll get through it. So another vocabulary word that's going to come up a lot, and I already did a video on it for the ABCs of investing, is earnings per share. You do not want a negative earnings per share, ideally. a negative earnings per share, or EPS, of $1 or more means that both you and the company are making a profit. Earnings per share means for every share of the stock, or for every portion of the company that is being bought on the stock market, how much profit is the company making, right? Now, if it's 1-to-1, then it's kind of like even balance, right? So you're not really gaining or losing money. But if it's above 1, then it's like, okay, you're really winning, right? Because the company is outperforming and is doing really well. But right now it has Snowflake has a negative earnings per share of not that much. It's just negative $2.33, but it is negative. Is that enough to make me nervous? I would just be curious as to why that is. Even with a market cap of 49 billion, market cap means how many shares outstanding are sorry, yeah, the value of the shares outstanding, basically, right? So this is how many people have bought shares or portion of the company Snowflake, right? So a share is a portion that you own of the company. So there's over 220 million people who have ownership of Snowflake stocks, of stock in Snowflake. And then this is the value of that in dollars, 49 billion, right? So even with that, having a negative earnings per share is kind of like what's going on. But let's continue our digging. Let's continue to figure out what's really going on with this company, right? So also, again, going to the 52-week range, this is the lowest price that the stock has been trading at for the past year at least. So technically it could be a discounted buy, but we also want to know that when we're buying it at a discount, that means it's actually going to go up and that we're going to ultimately see a profit from it at some point. So let's keep digging. So I do take into account these scores that and ratings that different financial firms have for the companies about whether or not they feel that it's a company you should buy stock in or not, and basically their confidence level on it. 7 is considered neutral here for this score, which is not that bad, but also it's not fantastic, and it's not like a sure buy, right? It's also not a sure sell, right? It's definitely not a sure sell, because if it was a sell, it would probably be like 5 or lower, meaning that you would need to sell the stock before it loses too much value. But a 7 is kind of like in between. So yeah, that's good to keep in mind. Before we get into the news stories about like what's going on with the company in general, let's just, because it is interesting here, that says Snowflake stock will pay off in the long run, analyst says. So that means that people believe that in the long run it's going to get up to a profit at some point again. But before we get into that, one of the other things that I like to look at are the SEC filings. SEC filings are the financial reports that a company is required to make public so that people know what's going on in terms of how much the company is making, how much did it spend to operate quarter by quarter, every year, etc. Just so you can get a better understanding about the health of the company. Like, is it doing really well? And this is required for all companies that are trading publicly, because we are technically part owners in the company, so we need to know how the company is doing in order to make our decision about what we're going to do. Are we going to keep ownership of the company or let go of it? So let's look at the filings. Let's go to 2021. This is not what I want to see. Let's see, not analyst reports. Let me see what's going on here. Oh, wait. Company events, blah, blah. Sorry, y'all. Okay. These are people who are reporting. We don't care about this right now. I'm sorry. I am trying to find something else that you would want to know more about. That you use to know more about the company, but it looks like I'm going to have to go to a different website. So let's do that. Let's go to CNBC. Another great website to go to for research. I'm going to type in the ticker symbol. So the market just closed, and it closed at $1 lower than what we initially talked about, which was 223. Still about, about $15 above the, $15 to $18 above the 52-week low, but still at a significant discount. All right, so I wanted to show you this, and then we're going to stop here because I also like to keep this very short. I think we've already been going beyond a half hour, and usually I keep these to 30 minutes. So let's get to where we're trying to go. Financials. Oh, there we go. SEC filings. Okay. No recent filings, excuse me. Oh yeah, that's right, because it just went public. I forgot. So it wouldn't have anything yet. So let's look at cash flow. And let's look at quarterly cash flow. So usually I like to look at operating income. So basically operating income means you can see where, like which part of the business is bringing in the most money or the most revenue. So like, for example, I wrote a blog post, and you can read this blog post on my website, which I'll also link in the description box below. But operating income when I wrote a blog post for Disney, right, the company Disney, I did a comparison between it making money from its theme parks versus its streaming services, Disney Plus, right? So operating income, or the section usually called operating income in a financial statement, is basically what different sections of the company is bringing in whatever type of revenue in order for the company to continue to operate, right? And so that's what I like to look at when I'm doing my analysis. And different companies file that information differently, and it's called different things depending on how their accounting processes work. And they'll usually explain it in a paragraph or so when you see their quarterly reports. But let's just look at their cash flow statement for now, right? So they are operating not in a profit. Whenever you see these brackets, it means that their expenses are outweighing their it's costing them more to be in business than it is producing a profit for them. So their expenses outweigh their revenue, which is interesting. So let's see. So net income, yeah, and they don't really outline here the different activities by which they're, like, they don't break it down. Like, we know that, they're a cloud data platform, right? So they, in general, help people store tons of information, through their businesses that they generate. But I just wanted to see like a breakdown of exactly what those different aspects are and what they're like, how they're packaging it and how they're selling it. It doesn't show it here in this financial statement, which is annoying. So that doesn't help us with making this decision. But we can show or say at minimum that their net cash flow is negative, right? So every single amount of cash that they're bringing into their company right now is immediately going to cover expenses. Now, that could mean that, okay, the salary, besides like basic things, right, like equipment, supplies and all that kind of stuff that businesses need to operate, maybe rent, right, for buildings that they operate in. They also are paying people's salaries, right? So depending on how they're allocating, and we can go to income statement for that or balance sheet for that, depending how they're allocating their cost, they could find places to cut costs, right, and reduce the amount that they're bleeding out in terms of cash. But as of right now, to cover, salaries, to cover rent and other expenses that they might have, it's costing them a lot more. And so they're probably relying a lot on debt to make ends meet because they are in the negative, right? Which I don't really like. I don't like that at all. So let's look at their liabilities. Liabilities is their expenses that they owe. Yeah, so if you see their total liabilities, well, I mean, it balances out. And that's here with this line. So for 2021, which that was last reported on January 31st, 2021, their total assets were valued at this amount, and I'm trying to see what this is probably in the millions, or if not billions, right? And then their total liabilities balance that out, basically. I don't know. I'm not really feeling this company right now. I thought that maybe with the discount of buying the stock right now, that it might be a good idea to get into it. But now when I look at their financials, I'm like, I'm not really sold. Not really sold on getting this company. So basically, it also looks like the outstanding stocks, or the earnings for their outstanding stocks is helping them to cover a lot of the expenses, which makes sense. There's probably a lot of people who are bullish about this company, and they're helping it stay afloat by buying into the company as investors. But I think that's silly. And I'm not really interested in supporting that. I want to see a healthy balance sheet before I get in, right? And I want to see a clear pathway to you producing a profit for me. So yeah, right now I'm not convinced that if I were to buy now that they're going anywhere near a place where, in like, whether it's in the long term. I mean, what is long term? Now we have to define what is long term. Like, when are they going to get their act together and not be in the red, right? That's the question after doing some of this digging. And so now I would be curious to go to the news that we saw with that Barron's report that said that an analyst says that Snowflake stock will probably pay off in the long run. So I'm curious. Tell me more, Eric Savitz. And then this is where we'll end our Tea for Tuesday for today. So Snowflake stock will pay off in the long run, analyst says. Okay, so it picked up in the second bullish analyst endorsement. Oh, it's picked up its second bullish analyst endorsement this week, as Evercore ISI analyst Kirk Matern basically gave it an outperforming rating and targets its stock price to go up to $311. Okay, when? That's my question. When is that going to happen? Right now it's at 220 or 222. And this analyst is saying it's going to get to $311. So why and how? That's our question. So on Tuesday, another analyst from UBS said that it's a buy rating also. So having a bullish or a positive outlook on the company. Oh gosh, the quote keeps coming up every time I hover over the name. But this one is saying that it will only go up to $275. That is a significant gap between one analyst's price performance guess and the other one. So yeah, let's read some more. There are a few software firms over the last decade that have as large a growth opportunity as Snowflake. While we acknowledge that the stock is going to need to grow into its valuation, yeah, basically saying that right now it's overvalued, right? Which I agree. The price of the stock right now does not reflect the actual value of the company. But anyway, the analyst says, we believe the long-term risk and reward and upside optionality warrants an outperform rating. Okay, you didn't give me any information as to why you believe that. Sometimes you have to decide, are you just going to take the word of analyst or are you going to use your own gut and decide what you think is right? And right now I'm not seeing anything, but let's keep reading. Okay, so this is the same analyst. Yes, Matern says that Snowflake offers investors a way to invest in the rapid growth and democratization of data within organizations. He thinks the company can generate 60% compounded annualized revenue. Interesting. He thinks that it's going to compound annualized revenue, it's going to generate 60% compound revenue through 2025, right? So basically, we're going to see it get to its significant valuation in the next 4 years. So that's a very, very long term. So this would be a very, very long term play. This is not a profit within the short term, according to him. As he explains in the note, Snowflake's model is to tie revenue to customer queries where the value is rather than to data storage. Okay, I get you. So basically, now they're explaining their strategy for how they're going to find ways to make more money, right? And they're basing it based on their potential customers. What are they looking for usually? And then they're going to now try to create those services to meet that need, right? So rather than just saying, okay, this is the problem that we think you need to solve, we're going to look at what customers are inquiring about and build around that. He adds that Snowflake's model allows customers to integrate data. Oh, sorry. By the way, so they're not selling. Just to explain that a little bit more, they're not selling to customers that, oh, we're going to help make your data storage a lot easier, right? Which is probably smart because there's so many companies now that are jumping on that bandwagon, and it could potentially become oversaturated, right? And they're going to have a lot of competition with people who are offering data storage options like Amazon Web Services, etc. So they're saying also it's going to be more around like creating a query system, I think, also, where it's like they make it easier for you to find information that you're looking for within like this huge amount of information that they have available to them. I think that's also what they're saying. Okay, so he adds that Snowflake's model allows customers to integrate data from disparate cloud platforms and not worry about lock-in. Okay, sure. Valuation is going to create near-term volatility, and investors need to take a long-term view. Yes, we already established that. We acknowledge that Snow trades at a premium valuation on almost any metric. Yes, agreed. The stock right now is trading at 32 times its 2022 revenue estimate, which is a year from now. So right now it's trading 32 times more than the revenue that it's anticipated to actualize or realize in another year. So kind of is very expensive right now compared to what its value is, which we've already established. He adds that the stock is not for the faint of heart, aka me, and will play out over multiple years, not just for the next few quarters. Okay, I don't know. This report didn't give me a lot, and this is where we're going to sum up. So I'm going to stop sharing my screen. Okay, so this is where we wrap up. I am trying to learn more, or trying to feel more comfortable with taking calculated risk, right? You're not always going to see usually when you see a clear pathway to making a profit off of a company, it's probably already not going to go up that much, and you're probably not going to see a huge profit, if that makes sense, right? So if you already feel pretty decent and comfortable, and there's enough things showing you that you feel really comfortable about a company, it's probably just going to be a very safe company. It's probably going to be a company where you're just going to see a little bit of increase in value from where you purchased it at, right? So like, for example, you might have purchased a relatively safe company stock at $50, and maybe over even 5 years, you're only going to see it go up in $20 in value per share, or per share of the stock that you have. Excuse me, guys. So that's the cost benefit of playing it safe versus taking the risk, right? Because with this analysis, right now it looks very dangerous to get into the stock, because it's like, where's this valuation coming from? Like, why is it trading 32 times its revenue? That's not even here right now. It's supposed to happen a year from now. That's a risk that you have to just be willing to take, depending on how much capital you're willing to sacrifice. And by capital, I mean how much money. So how much money are you willing to sacrifice in order to bet on the fact that it's going to go up to that, ideally, that $311, right? That it's predicted by one of the analysts that was in that report. And then you're also not going to see it until probably 2025. So is it worth it, right? And then beyond that, like, what's the benefit? So for me right now, I'm not so pressed to buy any Snowflake stock. Like, if they said something like, okay, you're going to see that stock price within the next year, and then from there it's just going to go, like, it's going to shoot up over and over again, like over the next couple of years, which I think they kind of said when they said that it's going to reach a 60% compounded annualized return by 2025. So maybe they're kind of hinting at that. But that 311 price point, I just want to double check and remind myself when they said that that's going to happen. Oh, they didn't even say, they just said it's a target, but they didn't say when it's going to reach that price. So that's another thing. I don't even know when it's going to reach that price. I need to do some more digging on that, and maybe I'll write up a quick post on Instagram and keep you guys updated on what I find out about that. This is already going on for an hour now. I said I was going to end this a long time ago. But long story short, and I said this also on my Instagram page, you have to determine what your level of risk, your risk tolerance is, right? Are you someone who just wants to really hold on to your money and just, for in exchange for just seeing very small increases in value? Or are you someone who is willing to, with calculated risk, right? So doing research first, not just throwing your money out there like you're playing a casino. After doing some digging and research, are you willing to take that risk for a potential long-term gain? As of right now, I'm on the fence. I don't really know if I feel like going into Snowflake, or Snow, the ticker symbol, right now. But this would be the ideal time to get into it because it's right now it's at a discount. So I'm like, that's like the tempting thing. Sorry. My throat is getting drier and drier. Maybe that means it's time to wrap up. But that is the tempting thing, that right now is the discount and right now is the great opportunity to get in. I don't want to get in when it's trading closer to 275 and then by that time it's like I'm really not seeing a profit. So I don't know. I'll let you guys know what I decide on doing after taking a beat, reflecting on it, praying on it. But yeah, basically the point of these videos is not to say go one way or the other, right? This is not financial advice. I'm not telling you to go and purchase these stocks. I have my disclaimer in the description box below, but I'm just voicing it over as well. If you do want my actual more stronger suggestions, that's where you purchase my services that are also going to be linked in the description box below. But the purpose of these videos is just to show you, okay, how do I go about even finding the information that I need in order to make a decision one way or the other, right? And just to mimic to you how to do that due diligence, which is one of our vocabulary words, right? How to do that process of researching and analysis, hence the A and T, how to do that analysis work so you can know which direction to go depending on your mood or depending on what kind of risk taker you are. And that's it. That's it for today. Hopefully this video was not too much rambling, and hopefully you were able to follow along. Please reach out to me on Instagram and in the comments below if you have any additional questions about anything I went over in this video. Please do check out my consultation services for fundamental equities analysis that I now offer through my investment LLC practice. The link will be in the description box below. And please, like, at minimum,